Hey, good afternoon, traders. This is Trader Tim from eMiniMind.com doing a Monday market analysis video. Today we're going to talk about a couple of trade setups that I took today, as well as kind of the bigger picture that we're setting up here. As you can probably see just by looking at the daily chart here on the left, we have a big triangle forming, and this could be great news for the point that we break out to give us some phenomenal trending. So you can see we've established a high and a low, then we've put in a lower high, and then we've put in a higher low. A higher low confirmed by the break today of Friday's high, and the lower high confirmed by the break of the low of this high bar in the bounce. So we've got a situation where we're making lower highs and higher lows, and we are currently sitting at the 50% retracement short from the recent swing high to lows, 27.18s. Below us, we have a 50% retracement long from lows to highs. That's a 26.60. So in the meantime, and be looking at on a little bit bigger time frame, 30-minute, 15-minute chart, looking at taking shorts at the 27.18 and longs at the 26.60. I'd be careful in the middle, right at this 2700 area. We could see some quick moves right through the middle of this range and just kind of go back to the 2660 and then back up to 27.18s. Once we break the swing low, get rid of some of these lines. So if we come up here and roll over and put in a lower high, whether we break the swing low down here or the swing high up here or a smaller one, whichever the most recent swing high is, currently it's right here. When we break that, that's going to be our sign to start jumping on board in that direction. Ideally, or typically what happens is we start to get tighter and tighter, form some smaller swing highs and swing lows, tighten at the apex right around 2700, and then we break. And when we start to break, we'll see it first on the 512, then the 15-minute, then we'll break a swing high, and then we'll really start to move. So I expect some continued good trading in the coming weeks, and especially when we hit that apex and break out. Now today we had a range in the morning and followed by a trend after the first hour or so of the morning we started trending, and that's kind of been the trend for the last week. And so early in the day, we did form a high tick at highs, which set up in a little bit of a short here. And we sold off a little bit, kind of back to the bottom of the range, but didn't really get any follow through. So that was my only trade in this consolidation. Once that trade didn't get the follow through, then I just drew lines at the top of the first 30-minute range and the bottom of the first 30-minute range. And anything with inside this range, I was playing cautious. We were saw this pattern all week last week. There was nothing great happening within that, so it kind of continued in that program to start off this week. But then once we started to break above, we had this nice little trend, broke above the first 30-minute range. I just drew up from the recent swing lows to highs, and we had a nice little pullback. Now we didn't get all the way to the 50%. It was one tick away from my entry. So what I did there is drew up the opposing. And when we're one tick away from an entry, I just consider that close enough. I consider that filled. I'm not going to try and chase it right there, just in case it does come back further. But in this case, we started to run away. And so I'll draw the opposing, meaning I'll draw the high to low, because I already had the low to high drawn that I was trying to get long of. Once we break that 61.8, then I'll just draw up the first long setup and use that as my entry. So rather than chase the trade, I'll let for a little confirmation happen let that 61.8 break of the opposing, and then I'll just get in on the 512. So got in here, and we had 3 tests over the course of maybe 3 minutes. We kind of sat around, and then boom, we got moving. And when this happens, when I take a smaller setup after a bigger setup like this, I'll use the target, the negative 23 of the bigger one. So you'll notice the distance between this 50 and negative 23 is really, really tiny. It's not even worth the risk to reward. I'll get in at the 50, 26.87 and a quarter, and then I'll just use the negative 23 up here at 92s. And then the rest of the position I'll trail. So I'll trail these swing lows. Then I was eventually taken out up here at 96 50s, 26.96 50s, and that got me out of the rest of the position. And there were a couple more setups later in the morning, uh, drawing just from lows to highs. Once again, the ES usually trades at its 50 for it stays around the entry a little bit longer sometimes. Some situations it'll come down, tag the 50 and go. Other times it'll spend more time at the 50% at the entry, and then when it gets going, it doesn't come back and retest. So that's why it's important when we break. I wait to move my stop till we break the anchor point high, the swing high up here. Then I'll start to tighten my stop. Otherwise, you tighten your stop too early and you just get chopped out before the trade even has a chance to work. So you kind of have to ask yourself, I use a 6-tick stop on the ES. Am I willing to risk 6 ticks to see, a potential 6 points? And, of course, every time for me, the answer is yes. So I don't need to tighten my stop to 4 ticks just to save those extra 2 ticks. Am I willing to risk those extra 2 ticks in order to make a couple of more points to see the trade work? Totally. One trade of 4, 5, 6 points easily makes up for a stop out or two. So it's important to look at the numbers in that way. That'll help give you confidence when you're going through periods of choppiness in the markets. Maybe you have 2 stop outs in a row first thing Monday morning. And if you know that, okay, my average winner could easily be 3 or 4 points, and that could make up for, my 2 stop outs that I had of 6 ticks each. No big deal. So as we head into the week, keep these 61/8s on your radar. The failure of the short, the failure of the long, as well as the swing highs just above and then below that. And that will be our signal that we're starting to break this triangle trend. And usually a triangle resumes once we break the apex in the direction that we were trending previously. So we were trending up, we entered into this really big triangle and potential triangle, and it's, more likely that we resume the uptrend. However, in this kind of a situation where the triangle is so big and we have this big correction, I wouldn't be super surprised if we come up here, break the 61.8, people start thinking, oh, it's, clear sailing, and then we roll over, maybe a piece of, news comes out from the White House or some economic data report, something that kind of shakes the market, and all those people who started putting on longs, the market starts to roll over, and we break a swing low, and then they get their stops hit, and then the market starts moving down. We come down, we break this major swing low down here. People really start to panic, and then we put in another one of these big hammer days once all that gets shaken out. So that's a scenario I'm definitely considering. And then at that point, we're almost in more of a flag scenario. And this is just kind of spitballing a couple of ideas that we could see. If the market comes down, we end up in more of a bull flag where we have a long run up and then a flag, sort of a downward channel at the top of a run up, and then it's at that point that same concept, breaking a swing high, breaking above the channel gives us that confirmation that a new trend is starting to form. So I hope you found that helpful. Tomorrow we'll be doing a live trading session again, as always on Tuesdays, walking through the markets, ES, talking about the trade setups, looking at the NQ and a few other markets as well, answering your questions. You can find all the information on that at eminimind.com/VIP. Thanks and have a great week.